Good morning, everybody. You're very welcome to today's webinar. Just to remind you all that the recording will be available afterwards, and any questions that you have, can you please put in the Q&A button tab, because that is what we will be monitoring. I'm going to hand you over to Deirdre. Deirdre Maguire is the Brexit Advisory Manager with InterTrade Ireland.
So good morning, and thank you so much, Orla, for that intro. Look, great to be here, and I know we've got great numbers, so I'm not going to spend too much time on the introduction. I just first of all wanted to say thanks very much to Newry, Mourne and Down District Council. This is Enterprise Week, and I know there's been some super events on this week for all the attendees. Anybody who's here, just keep an eye out for them, and Denise will give you some information about their support, so where to find them at one point during the session. So today's session is similar to ones we've had before. It's a Q&A, it's very informal. It's an opportunity for you to come in and ask your questions. We have some really good experts here on the panel today, so don't be afraid to ask whatever you need to do through the Q&A. We've got some questions that have been already sent in. And I would also say, if you do ask a question and sometimes you don't always get the answer, because sometimes they can be quite complex questions, we're going to have a look and see how the activity is today, and potentially we may host another webinar on a similar theme, probably in about 4 or 5 weeks. So please ask away, and I'll just do a very quick introduction on the speakers today, and they will introduce themselves as well, and then we'll just open up the Q&A session. So first of all, then, thanks very much to Newry, Mourne and Down District Council, and then we're here who have partnered with InterTrade Ireland today. Our speakers today are Derek Dunne, Marcus, Lynn and Jonathan Walsh. So Derek is the Managing Director of Manifest Ireland, and I could read you Derek's experience, but all I can say is you are in absolutely capable hands here. You know, Derek's a company of customs brokers, but also customs consultancy, works with AO applications, and also has over 35 years experience as well, customs compliance and customs procedures. So you're in very capable hands there. As the same with Marcus, who works for Pinnacle Growth Group, another very worthy service provider in the area, and some of you may know this consultancy. Marcus is a business consultant there, and he is also a customs practitioner with the Institute of Export and International Trade. And I know Marcus has been very, very close working with a lot of businesses over the last number of years. And last but definitely not least, Jonathan Walsh from Fortior Insight, who is another very trusted service provider, and works very closely with a lot of the industry in Northern Ireland as well, and also in InterTrade Ireland. So Jonathan is an international trade and management consultant, and 20 years of experience with a majority of time in industry, both at home and international markets. And Jonathan has a really good in-depth and practical knowledge of the Trader Support Service. So I know there'll be questions potentially on that as well. So look, that's the 3 speakers today. I will hand it over to you now, and that's me done for now. So over to Derek.
Derek, you just,
No, my apologies. Yeah, no, just to get unmuted there. Good morning, everybody, and you're very welcome to this morning's webinar, and I'm delighted to be invited here by both the Council and by InterTrade Ireland. To give you a little bit of background to myself, I've been engaged in the customs process for more years than I care to remember, to steal that phrase. And as I heard a colleague mentioned, I've been almost 30 years in training for Brexit, so we've been getting ready for Brexit as it came along over the years. So using that kind of knowledge and experience, we've been able to apply it to Brexit. And it's a very interesting morning this morning to be able to look retrospectively back at where we were this time last year and the preparations for Brexit and everything else, and the concerns that people had, what materialized, what didn't materialize, and what can still be done to make sure that your business is ready to deal with the issues. From the Republic of Ireland perspective, we really hit customs process was installed on day 1 on the 1st of January. So there was very little processes put off or put back, and we just had to deal with it from day 1. Again, that retrospective look back, we haven't experienced the queues of trucks. We haven't experienced the massive delays in customs. The customs processes, they are working very, very well. But they're only as good as the information that goes into them and the information that's gathered and how it's presented. And that's probably been one of the biggest fallbacks on businesses, is that they haven't prepared properly in doing that. We certainly experienced a number of different attitudes. We had the businesses who engaged fully in the process, wanted to know, were hungry and keen to know what they needed to do, and they coped very well with Brexit. And then you had the other type of business who was basically everything else needed to change, so they didn't need to change, and they struggled because the system changed, everything changed irreparably, and it was only by embracing it and engaging with it. So from possibly what was a very kind of chaotic January, February, March from our own perspective, it's settled down quite considerably now, and businesses understand what's required, they understand what's involved, they know things have changed, and they need to adapt to that. So that's made it a lot more manageable and a lot more workable. So one of the major things that we find dealing with businesses is that they now need to appreciate that they're engaged in international trade. It's not intra-EU trade, which was very similar to national trade. Credit terms were much easier. Incoterms, terms of trading were much easier. In fact, they weren't an issue at all. And now all of a sudden, we hear a lot of talk about Incoterms, who's responsible for what, who needs to pay for what. And it's really important that you have a good understanding whether you're buying or selling goods, what terms you're selling them on, and then identifying the Incoterms. Incoterms were brought about by the International Chamber of Commerce way back in 1937, I think it was, in order to give that bit of clarity as to what the responsibility for the different parties were in international transactions. So we've all heard the term, I'm sure, of X works. X works means that I'm buying the goods, X my supplier's plan, and I'm responsible for all the costs, all the customs process, everything in order to get those goods to my factory or to my premises. The opposite end of the scale of that then is DDP, delivered duty paid. That means that it's the seller's option, it's the seller's responsibility to get the goods to me. I don't really care how he does it, what he does, but he gets the goods to me and I buy them similarly as to the way I was pre-Brexit. I don't get involved in the clearance process or anything else like that. So Incoterms are a really important one to have an understanding of. Don't blindly sign up to Incoterms unless you understand what they are. And if you're using them, make sure that it's one that suits yours. The whole process is continually changing and evolving. There are a number of different processes being brought in during the course of the year to speed things up, to make things a lot easier. So keep in touch with seminars such as this and other information from both HMRC and Irish Revenue, so you know what's involved and you know what's required there. The last thing I'll close with is just a reminder to make sure that if you're involved in customs transactions, you have a liability as a business to retain records up to 4 years, 3 years plus the current year of customs records. So that includes copies of declarations, copies of invoices, any other documentation relating around those customs transactions. Don't depend on your carrier just to be providing this service. Don't depend on your customs broker just to do all of that. The good companies will be able to do that. The ones who are less experienced and less knowledgeable may struggle to give you that documentation. The liability rests with you as a business to retain that. We're already seeing a lot of post-clearance checks starting to take place and post-customs audits starting to take place now. And businesses are, they're struggling to get through some of it. We've seen have experiences of business who, were able to present all the records they want. They've had other carriers who brought the goods in and they can get no records at all. So the onus rests with you. Gather up the information, maintain it, retain it, and make sure that you have it on in the event that you may get a knock at the door from Revenue or from HMRC to do a post audit. So that's a kind of brief introduction, Deirdre. I hope that covers a bit of ground. And if there's any Q&A afterwards, happy to help.
Brilliant, and thank you so much, Derek. I hope that some people in the audience today will ask maybe some questions on Incoterms, and obviously the record retention is going to be massive as we move forward. So thank you so much for bringing those points up. I really appreciate it. So the next then is Marcus. Marcus, I will hand over to yourself just for a brief intro as well. Thank you.
Okay, thank you very much, Deirdre and Derek, for your introductions there. And hello, everyone. It's really great to be here today on this webinar. So a bit of background to myself. My name is Marcus Lynn. I'm a business consultant with Pinnacle Growth Group, one of InterTradeIreland's Brexit service providers. I'm also an accredited customs practitioner with the Institute of Export and International Trade. And like both Derek and Jonathan, I spent a lot of the last recent times supporting organisations across a vast range of sectors across the UK and Ireland understand what they need to do to prepare for Brexit and what they need to do now once Brexit happened to continue to maintain compliance going forward. And like Derek, I've seen many of the same issues, perhaps more of a bit of a Northern Ireland specific focus, especially around the Trader Support Service, helping organisations complete declarations. I know there's a lot of organisations out there who are still sitting with a wee bit of a backlog of declarations, and really understanding with that, how do you complete them? What information do you need? How do you get that information? As Derek mentioned, the importance of record keeping is absolutely massive. If you don't have the records, you're leaving yourself open to major issues down the line. Another big area that I've received a lot of questions on the last few months is at risk, and whether or not goods are classified as at risk or not at risk. And what I would always tell people in this is think of it as a bit of a checklist, and if you can meet any of the criteria, you'll not face any tariffs. But basically, if your goods, the tariff rate attached to your goods is not zero, then you need to look at some other options. One option that I've spent a lot of time chatting to organisations about is the UK Trader Scheme. This is an option that allows some businesses to be able to self-certify goods as being not at risk in certain cases, although there's some pretty precise eligibility criteria. I'm happy to take any questions on that and go into that in a lot more detail to really help anyone who's struggling or unsure as to how to go about with the UK Trader Scheme. There's also the ability if your goods are of UK origin. So there's a concept in customs called country of origin, which is a really important area. And as happy to go into a lot more detail on that as well. As well as that, there's a range of other ways that businesses can look to mitigate the impact of any duty that they will face from the customs de minimis waiver or various sort of customs special procedures. Other areas I was supporting businesses on in recent times is some of the fundamentals of customs. As Derek mentioned, Incoterms, it's essential to get the right Incoterm. Other areas as well as that, even things like commodity codes. In many cases, it's Customs 101, but it's so important that as a business, you get the right commodity code for your product. And when I speak to businesses, a lot of them sort of say, I just get the code off that my supplier gives me. But my message to them is, as the importer, you're the one legally responsible. Yes, you might be provided a code by a supplier or a customs broker or anything like that, but you need to be satisfied in your own mind that that code is correct. So you need to know how to find a commodity code, what a commodity code is, and also if there's any uncertainty, which there sometimes is, how can I get my choice of commodity code legally verified? And I suppose that's a very, very brief introduction. We obviously go into a lot more detail about any of them topics. I'm sure there'll be a few questions on some of them throughout this webinar.
Brilliant. Thank you so much, Marcus, and really good to have that spread of knowledge as well. So from the Northern Ireland perspective for business too. So we do appreciate it, and I'm sure there'll be questions coming in on many of those things. So look, we'll pass over then to Jonathan. Jonathan, you're very welcome and delighted you're on board today as well. So thank you.
Hey Deirdre, hi everybody. Look, I'm going to keep it very, very brief. As Deirdre said in her introduction earlier on, I've about 20 years experience in international trade. 15 of those years has been in industry itself, working both here in the home markets of UK and Ireland, and then in far off places like the US, Russia, China, Africa, Scandinavia, and Eastern Europe and places like that. I'm a fellow of the Institute of Consulting. I'm a full member of the Institute of International Trade and Expert, and I hold both postgraduate and undergraduate qualifications in management and economics. So my experience over the last number of years, similar to Derek, similar to Marcus, and definitely similar to InterTrade Ireland, is we were working on the theory up until January of this year, up until late December. We didn't really know what was going to happen with a lot of the parts. We didn't have a trade deal until the 24th, tea time on Christmas Eve last year. And then I had a wonderful bit of text to read over the course of the Christmas break. And then Northern Ireland Protocol, we've dealt with that a lot over the last year, well, 2 years, October 2019, when it was the text first came out, and then when it was passed by both parliaments in January 2020, but we didn't really know what was going to happen. So we are dealing a lot with now the practical arrangements of and what it really means to companies. And we start to think about different things. So as well as the commodity codes, which are extremely important, I emphasize what Marcus has said there, the Incoterms emphasizing what Derek has said there. But we're dealing with things like moving tools of the trade, moving your tools, bringing your tools with you when you take a van over from Northern Ireland or from Ireland into GB, and then you want to bring your tools back, and how you go through that, the practical arrangements that you have to go through to do that. Preferential origin, rules of origin criteria, changes in margin scheme that we've had to deal with up here in Northern Ireland. Margin scheme goes well beyond second-hand cars, which is something that has been dealt with, but there is other commodities, items that are sold, second-hand, that are also impacted by the fact that the second-hand margin scheme is no longer applies for goods moving from GB into NI. We've also seen things like customs waiver forms. Marcus mentioned about the unique arrangements that we have in Northern Ireland, where we have the ability to declare goods that are either at risk or not at risk. In normal circumstances, all goods moving into a customs territory are deemed at risk. Northern Ireland, under the Northern Ireland Protocol, we have the ability to certify that our goods are not at risk, and we can do that through the UK Trader Scheme. Where they are at risk, we can then use customs waivers. So we deal with customs waivers, understanding for people of what de minimis allowance are, what counts as de minimis aid that they've received in the past. So all of those things we've been dealing with over the course of the last 10, we're into 11 months in, and no doubt we will be dealing with it for a long time. I can see that there's a very good number of participants here, and I think it's worthwhile to try and answer some of people's questions, and hopefully between myself, the InterTrade Ireland team, Marcus and Derek, we should be able to give some people some guidance here today. Thank you.
Thanks a million, Jonathan. So I am going to move fast here because I'll tell you why. We've already had questions submitted before the event, and they're chunky enough questions. So I have about 6 of them, and I see another. Well, there's at least 13, so I know that's a lot of questions already, and we're not even started. So what I would say is I'm going to try and go through these quickly, but I would also say to the experts here today, try and just give a good, quick enough answer that will maybe, and if we need further detail, we'll come back to it, because we want to sort of get as many questions answered as we can today. So I'm going to move quite quickly, and I'll do my best. So just to be mindful that we'll do our best to answer them properly, but also that we'll try and get through as many as we can. Okay, so the first one is, how can I avoid paying duty on goods purchased from the UK, from a UK-based distributor for an EU-based manufacturer? So they're an EU company, and they're just saying, why do we pay duties on goods manufactured by another EU-located company just because they've been invoiced from a UK-based company? Will I read that one again? Jonathan, Jonathan? Yeah.
I can see Marcus wanting to come in there as well. So there's a couple of options in this. I think this is an issue with well, not an issue, it's part of the trade and cooperation agreement. So there is tariff-free trade between the UK and EU and vice versa. For those goods Oh, sorry, I need to turn my power on. For those goods that are moving from those goods of origin, so they are either originate in or they meet the rules of origin for that particular commodity code within one jurisdiction moving to the other. So what it would appear is happening there, Deirdre, is that goods have come from a EU manufacturer, they move to a UK distributor, and then they're moving back into the EU again. And that could also apply for Northern Ireland with that de facto thing. So they don't meet the criteria under the UK-EU TCA. They have a number of options. They have return goods relief, which is an option for them where they can basically claim back the duty because they're goods from the EU returning to the EU. That would appear to be the option for them. Northern Ireland companies have other options in terms of waivers and so forth, but it would appear it's because of the limitations within the UK-EU TCA that it only applies to goods moving from one jurisdiction to other. Marcus mentioned earlier on rules of origin, they are as specific to commodity level within the UK TCA. And that means that unless there is a significant change taking place, the origin won't change, and that's where the issue is coming in. Marcus, anything you want to add to that?
Yep, I suppose just even to break that down as well a wee bit. So you might hear myself or Jonathan talk about this concept, the rules of origin or country of origin. That does not mean necessarily the country where the goods were just imported from. It means in most cases where the last substantial economic transformation took place. So basically where there was a sizable amount of processing that caused either the value or the commodity code change in most cases. As Jonathan said, the actual rules for specific products will depend on the commodity code. But so if you have, for instance, if you have goods coming directly from the EU into either Northern Ireland or Republic of Ireland, not going into GB, there'll be no customs requirements on that. But the situation, as Jonathan says, will be more complicated when going via GB. So if you bring goods that are manufactured in the EU, so of EU origin, into GB, and those goods are, for instance, say, placed in a warehouse in GB and not subject to any processing while they're there, and then you subsequently import them into either Northern Ireland or the Republic of Ireland, as Jonathan said, that would not, there may still be duty on that, even though it's effectively an EU product coming back into the EU. As Jonathan said, under the terms of the, you might hear the term TCA or Trade and Cooperation Agreement, which is a fancy term for basically the UK-EU trade deal. Under the terms of that trade deal, there are no, you cannot, it does not apply to basically re-import previously exported products. So you previously exported goods from the EU to GB, you can't re-import them into the EU under that trade deal. So that's why there is tariffs. And as Jonathan says, you just, there's a range of ways that you can look at mitigating that. The return goods relief is one. There may, depending on what you're using the goods for, there may be other sort of procedures as well.
Okay.
Also, if sorry.
Yeah, that's great.
Okay.
Special procedures, that is fantastic. And I know we're going to get more of these, so I'm going to keep you here, Marcus, because the next question is the same question, but I just want to make sure that it's covered off. So we buy a product from the UK-based company. It's originated in the UK, so it comes into Ireland with no duty. Okay. So this company puts the barcode on it and ships it back into the UK. Okay. And declares its origin as UK, but they're saying it attracts the third country duty to the customer. Is that correct?
Yep. So basically, the products coming from UK to Ireland, UK origin. So as a result of the TCA, there'll be no duty on that movement. That is correct. Obviously, you're sending it back to from Ireland back to GB. Unfortunately, it's going back the way again, so there should be no duty on that. I suppose one thing that points to make here. Duty. Sorry, I mean if you're going UK to Ireland, and then going back to the UK, sorry, yes, that will attract duty. I suppose the point I would also make is if the product was going into Northern Ireland, the situation would be slightly different. So under the so the UK government introduced a policy known as unfettered access, which aims to allow businesses in Northern Ireland to basically send goods into GB without having to face many customs challenges. So under that, if you were to import that product into Northern Ireland, again, no duty when you import from UK into Northern Ireland because it's UK origin.
Okay.
You then obviously could send it back to GB if you were in Northern Ireland on without facing any further customs requirements due to the unfettered market access policy.
Brilliant. Okay. So we know where there's plenty of work to be done and plenty more questions to come for businesses. So I'll move quickly on. So basically, Derek, there's a question in here, and I just thought it might be one that we could ask yourself here. So this is an Irish-based company, okay, and they focus around selling on eBay and Amazon, and as an Irish-based company, but with stock located and shipped from Northern Ireland. So they're kind of wanting to know what are the processes involved in that there. So they spend. Yeah, that's it. There's no question with this, actually. They just focus around that scenario.
Okay, and a couple of assumptions there, due to presumably if they're selling on eBay, they're probably using parcel carriers. Parcel carriers have got a separate arrangement, if you like, with revenue and HMRC, how they're dealt with. So really would need a little bit more detail on that one.
Okay.
But if the question wants to send some more details in, we'll happily do it offline.
Great. Okay, so I will just say, so here's another one. Is there a straightforward way to declare a van with tools only, no goods, travelling from Northern Ireland to GB via Dublin? So we're talking about unfettered access. So TSS want commercial invoices with commodity codes, values and weights, which obviously isn't possible when it is the company's own tools and are not commercial goods. Anybody want to pick that one up?
Yeah,
Derek?
again, it's one certainly for going out of Dublin. There are a couple of different options. You could look at doing something like an ATA carnet, which covers that type of thing, but they are an expensive tool. Or you could do an export declaration leaving Ireland using that commercial invoice, and then making a declaration into the UK, putting the goods down as being used as temporary import. But it isn't a straightforward one, unfortunately.
Really?
Carnet would be the most useful tool in doing that, but as I say, it is an expensive process. Carnets are issued by chambers of commerce, so you could have a chat with your local chamber of commerce.
Okay, that's great to know. We'll follow that one up as well. So basically, here's another one. We're coming near the questions sent in before the webinar, and then we'll get to the ones in the chat. So this is one, a company that gets their product manufactured in the UK and sent over to Ireland. During the process, the product has to go back to the UK for adaptions and finishing, and then it's returned. So it's processed. So then this Irish business sends the product back to the UK for the process. And do we include the value of each well, it's an actual shoe as the product on the invoice?
Yeah, it's amazing the amount of trade that actually takes place and became apparent that crosses backwards and forwards, and you see in the ultimate manufacture of a single product. There's a couple of things at play in there again. One is the origin of the goods. The origin of the goods, if they're manufactured in the UK or in Ireland, but they're worked sufficiently in the UK that it would have changed the commodity code, or there's sufficient work on them, and the origin could technically change in them as well. There's a number of customs procedures as well that can be looked at by both the UK and the Irish business, inward processing and outward processing, and that allows you to send goods out without and bring them back in without paying duty or VAT, except on the work that's been added to them. So it's that value increase in value. So have a look at inward and outward processing would probably be the key one there.
Okay, and we'll get maybe some information on those kind of things sent out with a follow-up to the webinar as well. Seems to be the special procedures are kind of are important, and return goods relief, we'll add that on as well. So the last one here that I have before we go into the chat, this is a company who spends a few hours a week completing Intrastat returns, but with the requirements from the 1st of January, that's going to be, they say, at least 3 to 4 days of work per week. They're saying that they've got thousands of products and it's nearly impossible to provide, we're at origin again, the country of origin for each individual item that crosses the border into the north. Have you had much feedback from other companies in relation to this? One of our competitors is planning on putting Ireland as country of origin, but we're not sure if that is right or wrong. So this is about a business who has thousands of products, and they want to know, do they need to put all the commodity codes on their Intrastat return?
Yeah, it may not be may not be the answer that the questioner wants to hear, but there is only one origin of the goods, and that's the correct origin.
Yeah,
So wherever they're manufactured, that is the origin of the goods.
yeah.
If you just take the decision to put everything down as Ireland or NI or UK, well, you're obviously making an inaccurate declaration. So unfortunately, the only way is the right way.
Great, thank you. Okay, so now we're going to move into the Q&A in the chat. I'm going to go right up to the very top one here. So first in, so basically, is there any indication of a more rigorous examination of a product leaving Northern Ireland to go to GB to verify whether they are entitled to enter without custom duties, or whether they originate in Ireland or the UK and should have customs duties applied? Again, Jonathan, you put it that you can answer this one, so I'll pass that one over to you.
Yeah, it's a very good question, Deirdre. And if we go by what the legislation states at the moment, it states that a Northern Ireland qualifying good is a good that is manufactured, commercially processed in Northern Ireland, and then there's a catch-all physically located in Northern Ireland at the point of sale. So that's where we have it at the moment. Now, Michael Gove had always stated that in the second half of this year, they would tighten up qualifying status to prevent circumvention, obviously for goods moving from the EU into NI and then into GB. That hasn't happened as of yet. We can only conclude that something will come down the line, and I don't know if it is going to go down the line of what will changes to what is qualifying goods or qualifying establishment terms for Northern Ireland businesses. But as it stands today, it is a good that is commercially processed in Northern Ireland will qualify as a Northern Ireland good, and a good that is physically located in Northern Ireland at the point of sale. So that is the criteria. Outside of that, we don't have anything else to go by at the moment. That's the criteria for a Northern Ireland qualifying good.
Okay, and can I ask you a question then, Jonathan, myself? So if the business is moving these goods, will they have a supplier's declaration? Will that be visible on their invoices, or what how does that work?
So these are, from what I take in, so they have goods that are moving from Northern Ireland into GB. The UK government insisted on unfettered access. We knew for a long time that there was talk that the EU wanted to have a security and supply declaration on goods leaving Northern Ireland going to EU. That didn't happen. There's a list of, I think, 11 prohibited and restricted goods that require a customs declaration,
Okay.
an export declaration. Those are things like Atlantic tuna, torture goods, mercury goods. They're not common goods. So outside of that, there is no requirement for any customs paperwork declarations for moving goods from GB, from NI to GB, because it is unfettered. So yeah, as it stands, we're surmising, we're assuming that there may be checks, market checks or whatever coming down the line, but as it stands, anybody who's meeting those criteria, it is a Northern Ireland qualifying good, physically located in Northern Ireland at the point of sale or commercially processed in Northern Ireland.
Okay,
Point of sale, that's the important part there, because this has came up regularly where companies would say, well, moving it even the other way, GB, NI and into EU, if the goods are located in GB at the point of sale, they do not qualify for Northern Ireland qualifying goods. They are not operating under the Northern Ireland Protocol. Equally, goods in Ireland that are sold to GB that move via Northern Ireland, they are not located. If they are not located in Northern Ireland at that point of sale, physically located in Northern Ireland, they are not operating under the Northern Ireland Protocol.
Great. Okay, thank you. So the next question then, some of our customers have used TNT from the UK. We are now, after months down the line, receiving VAT invoices from TNT. We have no SAD documentation from TNT for these invoices or imports. How do we deal with these?
One of the difficulties that the express carriers have had is the volumes which they carry. And for goods coming into ROI, each one of them, regardless of the value, does require an import declaration. So they've been struggling to step up with that. I'm sure they will catch up, and I'm sure they will. But the very minimum that you should be getting from them is a copy of the MRN number, which is the movement reference number issued by Customs, and that proves that a declaration has been made on it. So that's the very minimum you should be looking at, and whatever other documentation, albeit the VAT invoice, etc., gather up those details as well. But it is a bit of a shortcoming at the moment that I'm sure the express carriers will be dealing with.
Great. Okay, that's good to know. Okay, so the next question then, this is GB to Ireland via NI. So, okay, so basically, can a CDS import be made in Northern Ireland to clear the goods into the EU from GB? Are IE and XI EORI numbers recognised for such a declaration? And what guidance can you give on how this declaration is made, assuming it is the Irish importer who wants to be responsible for the VAT? A lot of questions here.
Yeah, it's not an uncommon movement for NI goods coming via ROI ports, and it's one that we've been talking with Revenue on to get a little bit of clarity. So if you go to Revenue's website, they will say any goods which are coming into an ROI port but going to NI should be covered by a transit document. So the goods move within the EU under transit. That transit is discharged at a temporary storage facility in NI, and the goods are cleared into NI using TSS or CDS, whatever process. Goods coming into ROI via NI ports, according to Revenue's website, there is a process of doing this in CDS. We've made some inquiries as to what that process is, and we've been told by Revenue that they're waiting for an update from HMRC.
Okay.
So I don't know, maybe one of the other contributors has a little bit more information on it, but there seems to be a bit of a lack of information on that one at the moment.
Okay, well, we maybe will pass that one over, but there's one more part to this question, and I'll ask it then as well. So can an IE import entry number be recognised in the Northern Ireland GVMS to allow goods to enter without the need for transit to Ireland to make an IE entry?
I don't believe so, no. I don't think
No.
GVMS will accept an entry number from any other jurisdiction.
Okay. Okay, will we move forward on? Jonathan, anything to add? Are you happy?
No, I was just going to say, so your XI EORI number for Northern Ireland trader or a trader under the trading under the Northern Ireland Protocol, we have been told by HMRC that your XI EORI number, because it applies to the Union Customs Code, is essentially seen as an EU EORI number. And therefore, any other IE, if a Northern Ireland trader held an IE EORI number or whatever, they don't require them anymore. They should surrender those because their XI EORI number suffice. As Derek rightly said, you can move goods via transit in Northern Ireland GBNI into IE, or if you have the capacity, the ability, because you've got a Northern Ireland established business, to clear the goods in Northern Ireland. And then when goods are cleared in Northern Ireland, they are free circulation within the EU. When goods are cleared in Northern Ireland, they are free circulation to go back into the UK as well, GB as well. That's the unique arrangement that we have under the Northern Ireland Protocol.
Okay, thank you. And so just, I know that for anybody who would be coming at this for the very first time, you know, even like GVMS, you know, what is, and I'm not asking to answer that, what I'm saying, I want to sort of focus on an area where maybe a business can get support. So I'm going to ask Marcus the next question, then I'm going to pass over to Denise, who will be able to tell you where you can get help, and then we'll go back into the questions. So Marcus, the next question, how long are records required to be retained for? Maybe you can answer that one, and then we'll go to Denise.
Yeah, yep, absolutely. So obviously with all the extra customs requirements, whether you're based in Northern Ireland, whether you're based in Ireland, there is a huge importance placed on record keeping. Realistically, you want to keep your records for at least 4 years. If you do ever become subject to any sort of investigation or anything like that, that number increases dramatically to around 10 years or so. Basically, and so obviously you want to keep records of all declarations, all commodity codes used, the country of origin. Make sure if you have all your commercial invoices, things like that, you want and just have it. Make sure you have it there. That if you're ever asked for it, if you're ever given an inspection or anything like that, then you'll be you'll have it there to hand. And I suppose just to pick up on a point that was made there, you mentioned GVMS. I'm conscious that for a lot of people I speak to, the customs is just full of abbreviations and things like that. So by all means, there's no such thing as a stupid question. If it's just like, what does this abbreviation mean, or anything like that, by all means, fire it through. Because I'm conscious there is a lot of jargon within customs on some occasions, and sometimes it's translating that jargon. It makes
You're
it easy to
absolutely
understand.
right. Absolutely right. But just before we go to Denise, just following on really on the records thing, I might as well ask this question. So somebody on the line here is asking for a list of what information needs to be retained. You did call it out there, Marcus. So what we'll do, maybe we'll take that as a takeaway in Trade Ireland, maybe to try and get something pulled up together as to what that list could be. So
happy to touch base with you obviously online about that, offline about that as well.
Yeah, that would be really helpful. Denise, maybe you want to let us know where a business would need to go to get some help, basically.
Yeah, absolutely, Deirdre. So the message here from the team and the Brexit Advisory Service is there's, I suppose, different kinds of support that are suitable, especially for businesses that are new to the customs terminology and all the jargon that these guys are talking about this morning. So firstly, we have our digital content. So that's our dedicated website. It's brexit2020.intertradeireland.com. And this site would provide the most up-to-date news on cross-border, how cross-border trade is changing, a breakdown on changes in how we move goods, how we provide services, changes that have been made in relation to VAT regulations, people, what have you. We've got guides to the import and export declarations, advice on all the Incoterms, the rules of origin, all the jargon we've been talking about this morning. And then we've got a section on there, frequently asked questions on each topic and trade route. So, and where we reference external organisations such as the Traces system, for instance, or the Trader Support Service, the link's always there, it's provided. So we're trying to make it as user-friendly as possible. We also have the links of any events such as this morning's. So that would be a one-stop shop for the latest information on all things Brexit. Our second support I just want to quickly mention is our Brexit Voucher. So applications are still welcome. This is 100% funded support worth 2,000 sterling or 2,250 euro. And the voucher can be used for consultancy advice in areas of customs, supply chain, legal, finance, and also to cover training such as customs training. So just the eligibility for that voucher is the business must be based on the island, must be a cross-border trader, less than 250 employees, and less than 50 million turnover, all with a satisfactory trading history. And you can apply online, InterTradeIreland.com/Brexit. So the voucher support can help with a range of training options as well. We've got a lot of service providers, plenty to choose from, including our three speakers here today, Jonathan, Derek and Marcus. They've worked with us for a number of years. And just as we're running this event in conjunction with Newry, Mourne and Down District Council, I want to mention their support. So their support, don't forget to log on their website, nmdbusiness.org. So the three takeaways from supports: Brexit2020.intertradeireland.com for all your digital content and reference tools, the voucher online on our InterTrade Ireland website, and nmdbusiness.org. So thanks, Deirdre.
Fantastic, Denise, that's great. And again, we'll share all those links after
Absolutely.
the webinar as well. Yeah, thank you so much.
All right.
Thank you. So we'll move on then. So if I buy X works in the UK, should I check if the clearance agent has done the export declaration correctly? Do I need to keep a copy of the export declaration? So far, I've only been concentrating on import sales. Jonathan, you've marked to answer this one.
So the Incoterms X works means that they are responsible for the export declaration and the import declaration. There hasn't, when goods are moving into Northern Ireland from GB, there is no export declaration requirement for those goods, and as such, they don't have to worry about an export safety and security declaration. Export safety and security declaration would automatically be generated with an export declaration anyway. What I think Derek or Marcus will be able to come in on this anyway, but with Incoterms, you need to be very sure of your responsibilities. X works means that you are responsible for everything when it comes to customs. You are essentially taking ownership of those goods at the door, and you are therefore responsible for ensuring that it meets all criteria thereafter. If the goods are moving into Ireland from GB, you have your export declaration requirements, you have your import declaration requirements, and you've got your safety and security declaration requirements.
Thank you. Okay, so this is the same thing. So we've received invoices and the SAD documents where the Incoterms were DAP. similar with the VAT postponed. My query is the shipper or the courier is entering their VAT number in box 48. That's a very specific question.
Yeah, no, that's okay, David.
Yeah.
Suppose, yeah, that's the courier's deferred payment number that they're putting into box 48. That doesn't have any bearing on the deferred VAT. So there's still a require, or postponed VAT, should I say? So there's still a requirement on the importer to declare that postponed VAT on their VAT return and show that.
Great, thank you. Another VAT question. I know we're not really focusing on VAT, but if we need to come back to it, we can. But somebody's asking about VAT on invoices on goods from the UK. Is there a different way of handling this? Is there a different way of presenting that, or?
Well, again, with the VAT can be postponed or not postponed. The choice is with the importer. We've seen it with some carriers where they don't give the option, and they should. But effectively, it is an option for the importer as to whether they want to defer their VAT to the next VAT return or whether they want to pay it up front.
Lovely. Okay, thank you. So the next one is in relation to, sorry, this keeps moving on me. Yeah, keeps moving down here. Hang on. In relation to the approved processing sector for the UK Trader Scheme authorisation, and in particular construction, can a construction business that is providing manufactured goods to another construction company that will form part of a permanent structure qualify under this, or do their goods need to be forming part of the permanent structure?
I got Marcus go on ahead in that one.
Oh, okay. So basically, I suppose to make a bit of background. So obviously, the UK Trader Scheme is a scheme that obviously allows businesses to self-certify that their goods are not at risk. One of the criteria on this scheme is that if you are importing goods into Northern Ireland, which are subject to commercial processing in Northern Ireland, and your turnover is over 500k, in most cases you will not be eligible for this scheme. There are a limited range of exceptions, and one of them is to do with construction when the on a permanent structure in Northern Ireland. So if you're importing goods into Northern Ireland and those goods are going to form part of the permanent structure in Northern Ireland, then they would be one of the very small number of exceptions to the rule.
Okay.
I should point out obviously that the vast, some of the other exceptions maybe, sorry, as well, just to go on, or if it's directly to do with food or animal feed, or in the provision of certain like healthcare, things like that. But for the vast majority of goods, if you're bringing them in for processing, in most cases they'll not be eligible. I say happy to discuss with any business if they're unsure about their specific sort of product and if they'd be eligible, or what to do if they're not eligible as well.
Great. Okay. So much detail for a business, isn't there? Like in almost every step.
There's
yeah.
And it's just, and it because it's so new, as like certainly I'm sure Jonathan and Derek, you'll find the same thing, that so many businesses out there, unless you're importing and exporting globally, you've never had to deal with customs before, and it's just such a new area, and you're best doing the right thing and look at seeking professional advice on certain things as well.
And the thing about it is, I suppose, for any business going at this for the first time or even the second or the third, is that you know, the more you do it, you get better and better.
Yeah.
And there is a lot of learning at the minute, because it's for lots of businesses, it's the first time.
Yeah.
Okay, so the next one then, the temporary.
Sorry, Diddy, for interrupting you. Can I add to that? Because this is something that I've had experience with, and it's emphasising the need to engage with HMRC and the UK Trader Scheme. Because you may think that something it will not be eligible for the UK Trader Scheme, and you find out it is. And an example I have is that kitchens, fitted kitchens. In normal circumstances, fitted kitchens, VAT and so forth, I've seen before that it wouldn't be seen as a fixture of a place of supply requirement and all of these different things. It's seen as furniture. Under the UK Trader Scheme, HMRC have confirmed to me that a kitchen manufacturer with turnover over 500k is eligible to apply to the UK Trader Scheme if they are only fitting kitchens in Northern Ireland or into the UK. So it is really important to go and get that. And I've seen there's a number of questions that come about this UK trader scheme around apportionment was one element that questions and preempting that, Deirdre, and also the grace period being extended indefinitely during the Northern Ireland, the UK-EU negotiations that are taking place at the moment. They've extended grace periods, including the grace period that allows a GB business with no location within Northern Ireland to apply for the UK trader scheme. And if that GB-based company is supplying, for example, fitted kitchens to a Northern Ireland-based company that is actually fitting the kitchens, my understanding from engagement with HMRC is they can continue to apply for the UK trader scheme on the basis that their customer in Northern Ireland would be eligible for the UK trader scheme themselves. That's important with the DDP terms come into play, where are they selling under delivered duty paid terms. There was another question, and I know because of number data, and this is just trying to move it on. Somebody that asked a question thereafter about if their customers are if their suppliers are selling to them on DDP terms, but they're not asking about what percentage of sales is going into ROI or elsewhere in the EU. That's because they have to be declaring everything unless they are approved under the UK trader scheme. They must be declaring everything at risk, and therefore duty is being paid on the full 100% of goods that are going in, unless they're using apportionment. And the ability for a GB-based company to use apportionment, it's not something that I believe it would be very difficult, because a Northern Ireland company who uses the UK trader scheme and uses apportionment to declare 80% not at risk, 20% at risk, or whatever it is, based on their historical sales of 3 years or more, has to provide evidence of this in order to get approval for apportionment. You can have approval for UK trader scheme, but you need to get approval to use apportionment by providing this evidence to the UK trader scheme. So it is really, really complicated and very difficult to cover in a short webinar like this. But as Marcus says, we're here and happy to help, and engage with HMRC, engage with UK trader scheme, because they will work well with you. They will do everything in their power to assist you, as will Trader Support Service, and of course InterTradeIreland.
Great, thank you. There are two quite long questions here about the Trader Support Service. I will come back to them. I want to get a few of the other ones answered here. So for goods at risk, UK and EU origin goods, okay, that are brought into Northern Ireland, and 5% of these goods are going cross-border into ROI. Is the 5% at risk applied at a total level, even if there are over 100 commodity codes, and the percentage of ROI sales could vary from 2% to 10%?
This is apportionment.
Apportionment. So is there a percentage of apportionment, Jonathan? Maybe expand on that. Like what is the percentage?
So apportionment is based on your historical sales. So UK trader scheme, I've got a lot of experience dealing with them directly, on behalf of clients.
You're cutting out there. We will move on. So we'll come back to that one in a minute or two, basically. So regarding Incoterm,
NI and GB.
you cut out there, Jonathan. We cut out there.
I'm sorry, can you hear me now?
We can hear you now, yeah.
Apologies for that. So I don't know where I cut out, but UK trader scheme, if you want to use apportionment, you need to provide evidence to the UK trader scheme of historical sales. So this is the breakdown of your sales on internal UK sales, NI and GB, and external sales, and you will provide them with evidence of this, be it your historical your Intrastats, ECC, whatever your internal, whatever your accounts, whatever you have that breaks down your sales. This evidence then will be used, and then you can declare goods at risk or not at risk. Now, if you have goods, you don't have to. If you have goods that come in and you know that none of those goods are at risk, that they are all going for customers in Northern Ireland, you can declare all of that under NIREM. If the goods are at risk, based on your historical sales or you can do your contractual future contracts, but you have to provide evidence in the first place. You can do a double entry per item. So you can say 90% of that item is not at risk, and you will declare that under NIREL. And you will then declare 10% for evidence, for argument's sake, 10% at risk, and you will declare that under NIAID, or you will declare that where you will pay the duty on those goods.
Can I just stop you there, NIAID, Jonathan, because that's the question we get in all the time. What is that?
This is that you are using the goods are at risk, and you're using your de minimis allowance because you have sufficient amount left in your de minimis allowance to waive any of the duty that's applicable under your €200,000 allowance, which you have over 3 years. Trader Support Service now allows you to add all your external aid that you've de minimis aid that you've got, de minimis state aid, and it will calculate for you the euro equivalent based on the month that you got. Prior to TSS having that capability, you needed to go on to the euro calculator, go back to the month when you got the funding, calculate exactly what amount that £2,000 that you got. For example, the grant, if you got the £2,000 grant from InterTradeIreland, you needed to convert that to euros and so forth. So NIAID is where you're declaring that you have sufficient allowance left to waive the duty. Now, that case is 5%. Sorry.
What does it stand for, the actual acronym?
Oh, no, I don't know, Marcus. I can't remember. Northern Ireland aid. I don't know. Is it
okay?
It's basically basically, although the use in acronym NIAID, it basically refers to what's known as the customs waiver or de minimis aid. So I suppose to bring things back level, because I'm conscious there's a lot of sort of terminology there. Obviously, one way of declaring goods not at risk is via the UK trader scheme. I know in that question they mentioned UK and EU origin goods. If your goods are of UK origin coming into Northern Ireland, you can actually declare preference under the TCA, which is basically the term preference in customs basically means either no or reduced tariffs due to a trade agreement, and TCA is the abbreviation for the UK-EU trade agreement. So basically, you can say under the UK-EU trade agreement, there's no tariffs on my UK origin products coming into Northern Ireland. That is done independently of the UK trader scheme, irrespective of whether you're registered for it or not, irrespective of whether the goods are staying in Northern Ireland or not. You can claim preference under the TCA for any UK origin products. As Jonathan said, you can also use the waiver if you can't use the trader scheme or the TCA. There's also, and then obviously then beyond that, various special procedures that may be applicable in certain cases.
Okay, I'm going to start moving really fast here. Okay. I feel like we're not doing. We do need to answer the questions, but we also have more here. So, as quick as you can, basically, right? Temporary arrangements for the UK trader scheme for GB businesses which are not established or do not have a fixed address in NI. Given today's session is really about cross-border traders here, so we're not going to spend a lot of time here. So, in Northern Ireland, to be able to declare goods not at risk has been extended as per HMRC guidance. Okay. However, a different part of the guidance now specifically states only people or organisations based in Northern Ireland or the EU can be named as the declarant on import and export declarations made in Northern Ireland. Is that?
I think it is contradictory, as the person said. I think it's just not been updated. You'll see the same delivery on parcels and goods of over £135 of value, and it tells you retrospective and contact trader support service. Things are moving so fluidly, everything's moving so fast. I don't think it's, but to just confirm, the ability for GB companies to apply for the UK trader scheme, like every other grace period, has been extended indefinitely during the negotiations. So it's not extended until a certain date, as was the case before, and we have cliff edges. It has been extended indefinitely during the negotiations. As Frost put it, the Northern Ireland Protocol continues to operate as is. So anything that was in place before continues to be in place today. Okay. So that's where we are today.
Okay. So now we're going to see now. So basically the next one here regarding Incoterms, again, Derek, it was one of the very first things you said at the beginning. So regarding Incoterms, is the importer responsible for processing the VAT? I know the supplier may pay the VAT, but does that VAT not belong in the importer's VAT return if the supplier is not an importer of record?
So Incoterms are to help with international trade. VAT is a national tax. So
Yeah.
it's levied by the government of import. A lot of these would be offset against business expenses anyway, and the VAT would be reclaimed. So it would be, unless it's specifically agreed between the two parties, it would be the importer paying the VAT, but not necessarily responsible for doing the customs declarations.
Great, thank you. An Irish-based company, let me just see, I've just gone too fast here. So an Irish-based company buying a product from a German multinational who operate in GB. Most of the products are manufactured in GB, but some are manufactured in Germany. And this is transshipped from Germany to a GB warehouse and then on to Ireland. This is attracting a customs charge. Is there any way to avoid that?
Yeah, so I'm happy to come in here.
Yeah.
So basically, so this is again something similar to what we were talking earlier on about return goods relief. So if you move goods from Germany into the UK or GB, under the UK EU trade agreement, there should be no duty on that movement. But if those German goods, if they're not subject to any processing in the UK, then come into either Northern Ireland or Republic of Ireland, then there will be potential for duty on that, because the trade agreement does not cover the re-import of previously exported products. What you could do in that situation, you could look at something like returns good relief, or maybe a couple of other procedures as well. So there may be. I'm happy to have a chat more detail around that as well offline if you about procedures that may be applicable in that circumstance for mitigating duty.
Thank you so much. So the next question is it's about Article 16. So we can answer about something that hasn't actually happened. What I can say, customs procedures currently in place allow goods coming through NI from the UK destined for RI can move freely across the border. That's what happens now. That's the fact today. So if anything changes on any of these things, of course, we'll always keep you in touch, and we'll be watching out closely to see if there's anything you need to know, and we'll do our best to get that information out to you. So the next one here is how can an Irish importer get details of import clearances when FedEx and other couriers, this is the same question, delay giving copy import clearances nor provide summary details to importer? I mean, I think we've kind of answered that one. Yeah. So I'm going to move on then. How do we process Northern Ireland manufactured goods that are temporarily in GB, so for an exhibition? There would be no invoice for goods returning to Northern Ireland as they're not sold. The haulier wants an invoice. Is this the carnet again, or what?
Well, again, the haulier looking for an invoice, he's correct. And if they're going on display, so maybe some of the goods have been sold, maybe some of them are being returned back. So the invoice would be applicable for that.
Okay. And would they put a nil value? Would they put a value on that invoice, or? No,
everything has a value. So again, there's only one value, and that's the correct value.
The correct value. Good. Glad I asked that question. Okay. So goods manufactured in Northern Ireland, should origin be stated as NIXI, or do we need to state UK origin NI, trade with Northern Ireland GB and ROI? Jonathan, you were going to answer that one.
I don't know if this is one that came up a lot, Deirdre, pre-Brexit. So when we were talking about labelling of Northern Ireland goods, and we had UK NI. So when goods were going into GB or staying in the UK, Northern Ireland goods could be labelled simply as made in the UK. And for goods that were going into the EU, and this is what we need to consider it as, it's EU. The Northern Ireland Protocol means the free, because of Articles 30 and 110 of the function of the European Union, Treaty for the Function of the European Union, that those goods can move the same way as member state goods. So the labelling is UK NI, but it's not something that's come up a lot recently. And I don't know if that's because it hasn't been policed as much, but the specific labelling that we were told at the time was UKNI for goods leaving the internal UK market.
Okay, great, thank you. Okay, and I know the grace periods we're not really at the cliff edge, as we find businesses nearly sometimes wait until we get to the end, very cliff edge, before we kind of check out all the rules. So, okay, so I'm kind of going to move down here. Sorry, bear with me, everybody, for a wee second. I don't want to miss out.
Just when you're doing that, Deirdre, it's just in return of goods, moving goods, tools of the trade, and Derek has touched on this, and we've got some guidance in this. I've got some guidance recently from both Revenue and from Border Force in the UK. So where a company is moving their own goods, they use what's known as an oral conduct. They can use a form in Northern Ireland, which is the C&E 1246 form, and a duplicate list to move those goods from Northern Ireland into GB. Albeit that there's no requirement of goods moving from NI to GB, they should declare those goods via a verbal conduct, a conduct declaration to Border Force. They can stamp the form, which means that when they return back, they will get the form C and E 1246 form stamped as well. Irish Revenue have also indicated to me as recently as last Friday that if you're using duplicate lists, you have to produce a PBN, but you can also do a verbal conduct, and you have to do that on the way out as well as the way back in. So you need to let them know that those goods are moving out as well as moving back in. These are things that people are only finding when they get to the van and get the van out and head to GB and then go, we need to do a customs declaration, because as Derek rightly said, all goods have a value. There is in the UK, there's Notice 252, which is the 6 different ways of valuing your goods for customs purposes. But there isn't a requirement for a customs declaration when you're using these duplicate lists or when you're using ATA carnets and all of those things. So check it before you move. Basically. Okay,
great. Okay, so we are an Ireland-based company and we're purchasing product from the EU, which is shipped directly to the UK for modification and sold back by us. Have I done this one again? Back to the EU and shipped directly from the UK factory to the EU customer. What are the VAT and the customs implications? Or is this the best course of action?
Outward processing, special customs procedures would seem to be the best thing to do there. Okay,
so this is the intrastate reporting requirements. So they're a wholesaler that sells through the island of Ireland, and they're just saying there is simply no reasonable way to track all our products from a country of origin perspective, as they are imported from many countries worldwide. Is there any way to avoid that?
Based on the fact that they would have imported them from outside at some stage, the origin is there is an origin there. So there was an import declaration bringing those goods into Ireland. They had to declare whether they were from China or from America or wherever. Non-EU or EU is not an origin declaration for third country declarations. So the information is out there somewhere, but with a broad product range like that, it can be a real nuisance in gathering that information together. But it does need to have an origin, and you may well be asked to prove the origin of the goods.
Okay. Okay, supplementary declarations in Northern Ireland are causing a huge issue, particularly for small companies. Have you any advice on getting assistance without significant cause? Because this is really a big issue further down the line.
I just said in that one, Deirdre, that there is this ability to use bulk. If I'm assuming that person is completing using Trader Support Service. So the option now with the Trader Support Service, when it came out, first of all, you're using custom freight simplified procedures. This means that you do not have to provide the bulk of information until after the movement, i.e. this is why you have an STI to complete, because you are completing a safety and security declaration. Your haulier or carrier is completing a safety and security declaration up front. That in turn is generating your simplified frontier declaration. That is giving the movement reference number that can be taken to the goods vehicle movement system to get your GMR, which you need to get access to the port. So there's all the acronyms that Marcus was about earlier on. The TSS is a work in progress. It is a system that is updating regularly. They are providing the ability to do bulk download for people who have multiple SDIs to complete through API interface. That means that they can bulk load the information into the system, and they are also allowing you to do duplicates and copy and paste the information that you've done before. So there is ways of doing it. I appreciate what they're saying about cost. If you go to a customs intermediary, customs agent, they will charge you per declaration to provide this information. However, if you've got an IT team or you've engaged directly with TSS, who have said that they will now provide one-to-one support for companies who need it and help them if they see, and I again regularly will get emails from clients where they will forward on to me where they've got an email from TSS where they've said something like, we see that you're bringing in goods that are origin of EU, have you considered return goods relief? They will try and support you as much as possible to ensure that you're doing this as easy. So engage with Trader Support Service, look and see his API bulk downloads a method for you, or duplication of previous SDIs, where you essentially copy and paste the information over. If it's the same goods moving over and over again, those my bit of advice there is engagement with TSS.
Great. Okay, thank you. I am going out of sequence here in the questions in case anybody's wondering. I'll come back to them. I won't skip them. So we are an Ireland-based company. We warehouse goods in Northern Ireland to ease of access to the UK market. We also sell to the EU. Is there an issue shipping from our NI warehouse to the EU market? Marcus, you've ticked this one.
Okay, yeah. So if you're shipping goods from Northern Ireland to the EU, Northern Ireland remains part of the EU single market for goods. This means effectively what if goods are in Northern Ireland and have cleared customs in Northern Ireland, they're then free to move to not just Ireland but anywhere else in mainland Europe without further customs requirements. Is the short answer. And again, obviously there's the unfettered access from NI to GB. Which,
Okay, thank you. What are the rules regarding vehicles moved from GB to Northern Ireland via the ferry where the seller is delivering to the port for unaccompanied transit? Anybody want to answer that one? I'm not sure I really understand that question, so.
Say that again, sorry, Deirdre.
So what are the rules regarding vehicles which are moved from GB to Northern Ireland, sort of coming in, right? Where the seller is delivering to the port for unaccompanied transit? Okay, so my understanding of that question, that there's accompanied and unaccompanied and accompanied roll on, roll off. And in an unaccompanied scenario, the carrier responsible for that movement is the ferry company. However, that isn't happening. That hasn't been happening. So the requirement has often gone back to either the importer or the carrier who takes ownership of the other side to complete the safety and security declaration for that movement. The safety and security declaration under Customs Freight Simplified Procedures is essentially the starting point that does everything else. It generates your simplified frontier declaration, which gives you the movement reference number, which gives you the goods movement reference when you put that movement reference or EIDR onto the goods vehicle movement service. So it should be, if we go by customs rules, and Derek, you'll be able to clarify this, as my understanding of it is that unaccompanied, the carrier for unaccompanied ro-ro movements is the ferry company involved. Their EORI number should be involved and so forth. It hasn't, and it doesn't seem to be happening. But that's my experience. Okay. Derek, you need to hit your unmute.
Apologies. Yeah, the ferry companies have changed their terms and conditions, so they don't need to fulfill that role, so they've stepped back from it. And it's just that we use the word transit at the end of that question. I wonder, are they referring to a transit guarantee? But again, if they want to send the question in offline, I'm happy to come back on it.
Okay, fantastic. Thank you. Okay, so this is another one. I've been asked by the UK Trader Scheme what programme we use to store records. Is there an actual system we should be using, or is it okay just to save these as electronic files? Who wants to do that one quickly?
I'm happy to take that one. So
Yeah.
when you read the guidance on materials, so basically it will tell you if you're a small business, just your sales and purchase records, or if you're a larger business, is there any logistical software that you use to demonstrate where your goods are basically ending up? Is the short answer. There's no sort of specific system or anything. It's just that will depend obviously on the business and its size and scale.
Okay, that's great. So does an Irish company have to set up a UK entity in order to export goods to the UK if they're using DDP and Coterm?
No is the short answer, but a lot of UK, and it depends on the commercial arrangement and the strength of the buyer versus the seller, what type of market it is. A lot of the major retail outlets in the UK are just saying we want nothing to do with the clearance process. We just want you to deliver to our door as normal. And that has forced a lot of companies into opening up UK business entities, and they're clearing the goods into those business entities. However, there's absolutely no reason why the goods can't be cleared into the UK in the name of the actual importer, and the VAT accounted for and the duty of applicable accounted for as well.
Okay, thank you. So this is another one about the exhibition. So if goods are returning to Northern Ireland from a GB exhibition, is the Northern Ireland manufacturer invoicing itself for goods it already owns? Marcus, you've said you'd answer that one.
Yep. So basically, whenever you move goods, even if most of the time when you buy goods, there's a sale involved, and the value for customs will be the actual sale amount. But in some cases where there's no sale for goods you already own, you've sent them for an exhibition, basically there will still need to be a value placed on them. And this is where Jonathan mentioned Notice 252 earlier. So there's 6 different ways of placing a value on goods. I would need to chat with the relevant business and we have more detail just to find out more about their goods to determine what the most applicable method of placing a value on it would be. But then obviously, once you would assign an appropriate value, then you would have the regular sort of import clearance into Northern Ireland, including supplementary declaration and the TSS.
Great, thank you. Okay, does an XI prefix need to be in front of the VAT number for invoices going from Northern Ireland to Ireland? Or will a GB number suffice?
Yeah, you need an XI. You need to register for an XI VAT registration number. If you're trading with the EU, you need to register and apply for an XI. You don't automatically, so it's not a case of just removing your GB VAT registration number and getting an XI. So my company, because I deal predominantly, wholly in services, I wasn't automatically provided with an XI VAT registration number. I only have my GB VAT registration number. But HMRC said at the time that companies with a BT postcode and that dealt with service goods as well as services, they may automatically have been provided with an XI VAT registration number. If not, they have to apply for it. So short answer is yes, Deirdre, you need your XI VAT registration number.
Okay, I'm coming back to a longer one that was in the chapter earlier on.
Well, you're all right, Jonathan, you're all right.
Oh, so we're based in Northern Ireland. We purchase most of our goods from GB, and these goods are then sold throughout GB in Northern Ireland, approximate 10%. We spoke with HMRC regarding the goods not at risk and the trusted trader scheme. We were advised to apply for the trusted trader scheme and state the 10% sales figure to ROI. Sorry, so that was ROI at the beginning. I'm going to read this again. Okay. We're an NI and we purchase most goods from GB. These goods are sold throughout GB, NI and approximately 10% in RI. We spoke with HMRC regarding the goods not at risk and the trusted trader scheme. We were advised by HMRC to apply for the trusted trader scheme and state that this 10% of sales figure to ROI. Our application was accepted. We again spoke with them to clarify that it was correct to declare our goods as not at risk, even though we're selling to ROI. Should we be concerned at using the TTS and declaring goods not at risk? Jonathan, did you sort of answer that one earlier on? Do you want to pick that one up?
Yeah, this is apportionment. And this is, if they are goods, they are self-certifying that goods are not at risk of entering the single market. If the goods, 10% of goods are entering the single market, they have to declare those goods at risk. So the UK trader scheme, to use apportionment, you need to be approved for the UK trader scheme. If they need to check, first of all, I understand from the email that they've declared to the UK trader scheme that there's 10% of goods that move into the single market. They should have been asked to provide evidence. My experience is they should have been asked to provide evidence of that, and then they do a double entry per item. So when you're completing a customs declaration, there's three parts. There's the movement, which is done pre-movement. That's your ENS and your simplified frontier declaration. You've got your consignment, which is the consignor to consignee movement, i.e. your supplier to you end of it. And then there's item level. That's where you have to provide information at individual commodity code item level. That is where you have the ability to declare goods at UK preferential origin if the goods are manufactured in the UK. NIREM if you've been approved under the UK trader scheme. If you've not been approved under the UK trader scheme, you cannot use NIREM. There's companies, clients of mine who've been using it, and they've now got letters from HMRC stating to them they need to apply for it, and if they don't apply for it, they may be eligible for duty payable. NIAID is where you're using customs waiver because you've got enough in your de minimis allowance. And finally, if you have none of those, you're going to pay the duty. You're using the duty deferment account, and you pay the duty by the 5th working day of the following month. So they need to be declaring 10% of those goods at risk if they are at risk, and they're using that historical sales as the basis by doing an entry and consignment level. And again, myself and Marcus or anybody, one of your service providers could assist companies with that element if they needed to work through it and completing supplementary declarations.
Okay, you've just brought to mind a question that was asked in Trade Ireland there quite recently, and I think it probably will be a common question as we move forward. And I just wanted to say about any businesses out there, like if you do have something you're experiencing, send us in an email. We might not always be able to get you the answer, but our goal is to be able to get you that answer. So over time, we will be working to get information updates out better and better and better and answer your questions faster and quicker. But one that did come in was a business who had taken their goods in from GB, gone into Northern Ireland, and had thought, right, I'm not selling them cross-border, they're just going to stay in Northern Ireland. And then they realised, oh no, you know what, actually we are going to sell these, we're going to sell them, and what do we do? So how do we go about it? And it actually took a bit of investigation to go in to find out, I think that you had to post a form to HMRC. Is that correct, Jonathan?
Yeah, my experience in this would, if supply chains and trade flows have changed as a result of Northern Ireland Protocol, as we know, and there's movements and there's opportunities for companies in Northern Ireland opening up. And if you have declared in good faith, and HMRC have always stated this, if anything that you are declaring in good faith, there will be no retrospective action taken if you are declaring in good faith that goods are not at risk or whatever it is. In this case, the client is doing everything right. They are very aware that the goods that they brought in that they thought were going to be eligible under the UK trader scheme under NIREM, and they've then subsequently sold those into the single market. They can raise a case study within TSS indicating that the goods, they now realise that the goods should not have been declared not at risk, that the goods are at risk, and they want to use a de minimis waiver. And then the case, when it's open, the UK trader scheme will work with them directly. They will also engage with HMRC. That's why we now see when you're completing your supplementary declaration to give you an option at the top of the form to say, have you changed any information that was previously included in the form, i.e. commodity codes or so forth. And they will engage on your behalf with HMRC to ensure that that has been done right. But absolutely, it is a process. As is the case of changing Incoterms. If you put something that come onto your Incoterms that you don't believe should be there, and this happens because you provide a supplier with your EORI number, and they put you in as the importer of record, and you know nothing more about it until this arrives in your door, that's where the issues. But you can raise individual cases on TSS, and they will endeavour to work with you.
Great, thank you. Now there's about 2 or 3 more questions in here in the chat, but I wanted to ask one just of yourself, Derek, and it's from a business based in Ireland. So we all know that there's talk about full customs declarations, short customs declarations, registering on IPAFs for food, and the end of grace periods. So if I was a business a cross-border business, and I am selling both to Northern Ireland, to GB, to the European Union, basically a little bit of everywhere, and I'm currently using well, let's say I'm doing my own customs paperwork. So I'm doing my own customs paperwork, and I'm currently availing of the shortened versions of paperwork that has to be that I have to complete to get my goods moving. Okay. What happens next for me at the end of the year if there's no change and the grace periods end? What does a full declaration mean compared to a short one?
Yeah, I suppose two things there. We look at it from the ROI point of view, and we look at it from the GB point of view.
Okay.
ROI, we've really been applying the full Monty, as it were, on declarations. There haven't been any easements or anything else like that, with the exception of export certification for animal products, etc. But what is changing at the end of the year is we're going to see GMRs being introduced, and this will be one for carriers to look at, where a GMR for leaving the UK or entering the UK is going to be a requirement. Currently, we have PBNs, more acronyms I know, but really what I'm saying is make sure and talk to your carriers that they're fully aware of what's required. Full declarations going into the UK now, we still have the possibility of some customs authorizations which allow you to postpone it, but I think it's best to plan on the basis of making a full declaration on the arrival into the UK. And that's where you need to be prepared at the time of shipment to make sure that you can cover both the export from one entity, jurisdiction, and the import into the other. As I said in my opening remarks here, keep tuned into webinars like this. Keep talking to organizations like Intertrade and to others. Keep yourself abreast of what's happening, because in some cases these changes are announced and they seem very low key, but they've got actually quite big impacts, and vice versa. What seems to have a big impact doesn't. So keep tuned in is really
okay. And one more question then. So if I am moving product that is of animal origin, okay, and I know there's been a lot of talk about export health certificates and potentially some easements along with that. Is there anything new that I need to do as a business in January if I'm based in Southern Ireland?
Engage with the Department of Agriculture. The Department of Agriculture have got some really good information and some really good case studies, etc. So engage with them and understand what your requirements are going to be. To get goods out of Ireland, yes, is going to become more complicated than it was. So make sure and engage.
Okay, and we will do our best here in InterTrade Ireland to try and highlight any of those key messages as they come up as well. So a couple more very quick questions. We're coming close to time, but I want, and I apologise if I've missed one or two. So we've gone, I think we've answered the XI prefix need to be in front of the VAT number. We said yes, that one. So there's one here asking how long will TSS be available for? Again, will there be any further support available for small businesses when it goes for custom software assistance? Do you recommend using an alternative to TSS sooner rather than later? That's a bit of a subjective one. I'm not going to answer that, but if anybody wants to pick it up, you're very
I'm happy to pick it up. So when the TSS, so the Trader Support Service is a system introduced by the HMRC and the UK government, and basically the funding for it was guaranteed for 2 years. From the start, so we know as to what is going to happen beyond them 2 years, it remains uncertain whether the TSS gets extended or whether another system comes in. At this stage, I mean, you could go down the route of getting your own sort of software, but that would likely in many cases not be as cost effective as the TSS. So at this stage, it remains, it's basically carry on using the TSS, and if and as and when any developments take place, obviously just take note of that and respond accordingly.
Thank you so much. Look, we're really bang on time now, and I just wanted to say thank you so much. Look, to Jonathan, to Derek, to Marcus, and to Orla and Megan as well for helping us host it, and Newry, Mourne and Down District Council for including us in Enterprise Week. On behalf of InterTrade Ireland, we really appreciate the engagement from you, the businesses. And I know if any of you are here, like, that is a lot of information to take in. It's huge. And to put it into perspective, every business is different, and not every business needs to know every single thing we talked about here. In fact, you might only need to know one part of that. So I would say that, you know, there is a way forward, and there are lots of options for businesses. So to find the right one is just really about asking the questions and just keeping on top of your information, speaking to your hauliers and coming in, ask the questions into us. If we don't get the answer to you, be assured that we're going to look forward into the future to try and get you better answers and come back to you as soon as we can. We did mention the voucher supports. Again, I would encourage anybody here who hasn't availed of that support to apply for it. It's been very, very beneficial. I mean, I had a look at the stats. We've got over 98% of businesses who've used it are saying that they've had such huge benefit from it. So I would say encourage you to use that if you haven't already, or if you've had an old one in the past a few years ago, come back in and you may be eligible again. And all of that there is really, you know, the support that you get, it wouldn't be done and delivered without our trusted service providers, and there's a lot of them, but today is just about thanking Jonathan, Derek and Marcus who are here, and thank you so much for your time and all your brilliant answers. We will do our best to follow up with anything we promised, and also if there's anybody here on the line that says, you know, we'd love to see you doing a webinar on this, let us know, because we're open to all of these things. So listen, thank you very much, and have a lovely rest of day, and hopefully we'll do this again soon. Take care then. Okay, thanks. Bye.